Good afternoon and welcome to BizTech's Asian Midday Market Watch. Jessica Amir, market strategist from Saxo Capital Markets, is our guest today. Jessica, good afternoon.
Good afternoon to you.
Now, Jessica, before we get your insights, let's take a look and see how crypto markets are performing, and then we'll take a look and see how regional stock markets are performing. We start with Bitcoin, which is at 19,769. It's down 0.59%. Ethereum is at 1,639.9. It's up 0.396%. Now, looking at regional stock markets, we've got the Straits Times Index, which is up 0.33%. Bursa Malaysia is up 0.12%. Shanghai is up 1.01%. The ASX All Ordinaries is almost unchanged at 0.01% up. The Nikkei is up 0.05%. Bucking the trend, we've got the Hang Seng, which is down 0.51%. And rounding up the numbers, we've got the Kospi, which is up 0.11%. Now, Jessica, what's happening in markets today? Because obviously there's more of a sea of green than with the Hang Seng bucking the trend.
Yeah, pretty much. But I guess we do have to remember there was limited leads overnight because the US, of course, closed for Labor Day. So we took our leads from Europe and then, of course, commodity markets. Commodity markets are in, I guess we can call it upheaval, distress, crisis. So this is what's driving markets. So distress and crisis, we're seeing punitively higher prices in energy markets. And we saw the oil price head back up in the order of 1%. And so that is why the futures tonight, looking down the barrel, the US futures, they're pretty much on the nose, but we're likely to see some more solid gains in the energy space. And that's because we've got no good news out of Russia yet again. So the Nord Stream pipeline, that's pretty much, the pipeline's pretty much not really shut up shop, but supply is limited. And this basically means that Europe is going to run out of energy later this year. So it's going to be probably a humanitarian crisis or a humanitarian issue, given that a large portion of the population will be running out of energy.
Now, we're going to come back to energy in a bit, Jessica, but the RBA just made an announcement. Tell us more, and what do you think the impact is going to be in terms of that hike?
Yeah, I guess that flows nicely from your first question. So the energy crisis is fueling runaway record prices for inflation. And that's the biggest component of inflation, energy. So today, the RBA, they hiked interest rates by 0.5%, in line with expectations, but they took the cash rate to 2.35%, of course, in a bid to slow down inflation. Now, how can the RBA slow down inflation is beyond anyone. But the RBA, just like the Fed, just like the ECB, need to be seen to be kind of getting ahead of the curve and rising rates to slow down runaway inflation. All in all, the impact on the market is going to be mostly a lackluster one for the growth sectors of the market. And specifically, if we think about the property sector, the property sector is already feeling a lot of pain just after the 1.75% in hikes, Brian, leading into today's hike. So all in all, if we think about where the cash rate is now at 2.35%, this is the highest since 2015.
Now, Jessica,
yeah.
Sorry, go ahead.
No, I was just going to say consumers don't like it, businesses don't like it, and this is why REITs are feeling a lot of pain. And we've seen construction tumble to one of its lowest levels since 2016, but house prices, they're starting now to crumble. So this is a bit of a concern. Property prices have seen the biggest pullback since the 1980s. So the wheels are starting to fall off. The property market's slowing down. Inversely, The RBA hiking rates today in line with expectations and mapping out a series of future rate hikes will not slow down runaway inflation. This means higher prices are here to stay for energy.
Then, and speaking of higher prices here to stay for energy, in the Australian context, a lot of power generation comes from coal, and rising coal prices is going to have a dramatic effect on inflation in Australia.
Yeah, spot on. So the RBA still danced around the fact that they're thinking inflation will peak just under 8%, which is pretty low compared to the G7 countries, for example. So if the RBA thinks that inflation will peak just under 8% this year, they're living on a pipe dream, because we know, looking across history, we know peak coal demand is in December. And of course, you said Australia is heavily dependent on coal, but so too are the world's biggest economies, China, India. So we see that power generation demand will pick up and peak later this year. So the coal price is already at records. So we're thinking it's going to hit brand new records, and indeed it probably will. I'm not a betting man, but the odds are indeed in that favour. So rising rates is definitely not going to play a part. But reflecting on what that means for Australia, it means we're expecting record exports to again hit new all-time highs over the coming months and quarters, and perhaps indeed to 2023 as well.
Jessica, they always say Australia is the lucky country, and again, amidst this crisis, the current account surplus, because of the coal price increases, will flow right down and pad up Australia's current account even more. Jessica, thanks for coming on the show, and thanks for your insights.
Thank you, Brian. Have a wonderful afternoon and rest of the week.
Now, we've been speaking to Jessica Amir, market strategist at Saxo Capital Markets, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners, TV stations, radio stations, and websites. Thanks for tuning in.